Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 97 quarter to 99 quarter as the bull bear zone, and the overnight low ended up being 1997, so that zone held. And from there, we actually got some news, ECB rate cut, and we had some econ news out this morning as well at 7:30 a.m. Central, and we actually ended up getting a pretty decent upside push back up towards that '07 area. So at this point, heading into the open, we're going to be using '02 to '03 as pre-market support, and really, ideally, we don't want to see, any deep pullbacks in this market. The way things are setting up right now, everything is set for a push back up towards 2011, the previous all-time high, just from yesterday's Globex session, and then a move up towards 14 quarter to 16 quarter. The only thing that could prevent a sustained directional move is really the fact that we have the jobs number out tomorrow. So that would be the only reason that there could be still a bit of back and forth. But above '02 to '03, the bias is going to be firmly on the upside. And again, ideally, we don't want to see much of a pullback. So '02 to '03 is an area that if we're going to get a continuation to the upside, then that '02 to '03 should hold. And if the market starts breaking below it, then that would be an early warning sign. And at the very minimum, it would tell you that this is not a very strong market. Below it, we're using 98 to 2000 as the bull bear zone, and that's basically the final line in sand for the buyers here. So in the event that the market fails to take out the pre-market resistance zone and starts heading back down towards 98 to 2000, buyers could still be active there on the first pullback. But at this point, that zone has been tested multiple times, and just the fact that ES is back down there again would be a bearish signal, and the zone may not hold, resulting in a push down towards 91 quarter to 92.75. So that's the alternative scenario, but that's not the one that is in play right now. I'm just covering it so in the event that there is a failure and we come down, we should be prepared that 98 to 2000 zone at this point, it's the bull bear zone, but it's been tested multiple times, and just the fact that ES is down there again would be actually a bearish signal, and it could lead to some downside. So the main focus is going to continue to be on the upside today, especially above '02 to '03, and we're looking for a push to a new all-time high. Now, it doesn't have to be a big, directional breakout. It could be a marginal all-time high, and then the market could start balancing again. But ideally, we want to see the market balancing now above '02 to '03 at some of these higher prices. And again, the only reason that we may not get a sustained directional push is if the market is waiting on the jobs report, which is due tomorrow. The volume situation is looking good. We're seeing some really high volume across the equity index markets. So as long as that continues, we should continue to see some decent momentum on the upside here. And again, off the open, that's something to look for, right? Strong internals, which are holding up and continuing higher. You want to see the tick spending more time above zero, and not only that, but actually printing some decent values on the upside too, right? So for example, yesterday, the NYSE tick for the most part early in the morning was around plus 2 to 400, which is very mediocre momentum, and that ended up resulting in a pretty decent pullback in the market. So some of the signs to look for would include some decent values on the NYSE tick to the upside, and then when the tick does pull below zero, you don't want to see any any extremes being hit. So you want to see it holding above minus 5,600 for the most part. And again, you want the advanced decline to be relatively steady. A little bit of pullback is okay, but overall you want to see it trending to the upside. So, the main bias is going to be to the upside. The other markets have some catching up to do. So NQ and TF, they can catch up towards yesterday's highs, so they have a little bit of room now to catch up. ES was the stronger market yesterday as well, so that's the one that does have potential to break to a new all-time high and then perhaps start balancing in a range. But for now, the directional bias is going to be to the upside. Again, especially above 02 to 03. If 03 breaks, then I think you have to start being a bit more careful on the long side and potentially even look for short setups. So those are the main ideas. Let's see how well the buy side holds it up, and we'll take it from there.